The third is to strengthen our shared approach to safeguarding the North American market from unfair trading practices by non-market economies. Canada, the U.S., and Mexico face common threats from subsidized and dumped imports, particularly from China, and we should continue to align on measures to protect North American producers. I want to pause on this point because despite the damaging actions that have been taken towards Canada, we need to remember that a long-term, whole-of-government bipartisan consensus largely exists in the U.S. around the issues of economic and national security vis-a-vis China. Fourth,
I believe you have said something very similar to China's neo-mercantilist approach to international trade in North American marketplace is something to be concerned about. I had to look that up, and I wonder if you could explain or talk about that statement and what your members see as the risk from China's participation or indeed increased trade relationship between Canada and China.
Sure. In general, it's a long-term trend since China's ascension to the WTO, which has not led them to adopt pure market-based reforms and integrate fairly into a multilateral trading system. Instead, it has been a very strategic sector-by-sector approach to try to increase production, oversubsidize specific industries, dump them on world markets to try to undermine production of those goods and services in other countries. So in general, while organizations like ours are not in favor of tariffs or trying to protect domestic producers, we are a trade-exposed industry, and our members compete on that basis. When you have trading partners, I'll put that in quotation marks, who are not abiding by the same rules and are seeking to not just sell to those who wish to buy, but to actively undermine global markets. We think it's not only something that we should be concerned about on behalf of Canadian manufacturers, but of course it's something we know that there's a bipartisan focus on in the U.S., and we hope an area where Canada and the U.S. can align on our approach to dealing with and managing goods that are being dumped on the market in that manner.
That makes me think of something you said in your opening remarks about the value in or benefit of a closer, more integrated market. It allows for the protection together against unfair trade practices, because that's really what we're talking about when it comes to China, isn't it?
Yeah, it needs to be the focus. Canada does a lot of business with China. We sell a lot to China. Canadian manufacturers rely on a number of Chinese inputs that cannot be accessed in Canada or the North American market, so it is not completely one or the other. However, there are specific sectors and activities where we know China is undertaking these unfair activities, and those are where we think there's opportunity to continue to align with the U.S. in particular and Mexico to protect the North American market. That said, in fairness to Canadian negotiators and others, Canada has followed the U.S. suit even prior to President Trump's election with specific measures around steel and EVs, and our reward for doing so is to get punished from China and to get punished from the Americans. So I think an important message that Canada needs to send to our American allies is if you want us to act in a way that is consistent with the interests of all of our shared manufacturers and their workers, they also, the Americans need to act in a way that is consistent with those behaviors. So unfortunately, we haven't gotten the support or the reaction we'd like from Americans for following suit or in some cases going farther on these policies.
Mr. Greer, do your members hear from their business partners, their either suppliers or customers in the States, that they're as concerned about some of the developments in our trading relationship as Canadians are?
I mean, at the moment, everybody in manufacturing supply chain is concerned with the current state of Canada-U.S. trade, but even the broader geopolitical global trading environment, which is shifting obviously much more towards regional blocks and towards economic and national security considerations. But broadly, all of our members, certainly all their supply chain members, are hearing a lot about the challenges of the current tariff, unjustified tariffs, the impact it's having both directly and indirectly on their businesses and their employees, and what it portends for the future, because nobody at this point wants to make any significant long-term investments. And so, well, they say nobody wins a trade war. I think some of our regional competitors in this instance are probably winning.
And that brings me to a point of great concern. When business senses uncertainty, capital stays on the sideline. Often there's talk in the House of Commons, to which we're adjacent, about public investment, but your members would invest a great deal of capital in their business plan and operations and expansions and opportunities that they see. But this uncertainty must be a tremendous burden right now.
Yeah, it is. Long-term investments are being postponed or not considered at all. Although it's going to compound the productivity problem that our sector and Canada has in particular when these investments are taking place. I think the opportunity is, although we don't control the decision-making coming out of Washington, D.C., we do control our own domestic policy environment. And so we hope the urgency that seemed quite present several months ago, and we hope remains present through the federal budget a few short days from now and beyond, to improve the domestic policy environment, to do everything we possibly can to incentivize businesses to invest in their workers, invest in their facilities, and invest in their products to compete better domestically in North America and abroad.
Thank you very much.